Have you ever wondered who truly controls the value of the money in your pocket? It's not the politicians you see on TV, grandstanding about the economy. It's not the titans of industry you read about in the news. The real power belongs to a group of people you were never taught to question, operating from buildings most of us couldn't even point to on a map. These are the central bankers, the high priests of modern finance. They don't run for office, they rarely make headlines, and their decisions, shrouded in cryptic jargon, can enrich or impoverish nations overnight. They wield the godlike power to create wealth from nothing and to vaporize your life savings with a few keystrokes. And the most unsettling part, in the grand scheme of things, they don't answer to you. This is the untold story of how a small group of unelected technocrats became the shadow rulers of the global economy. It's a tale of calculated power, masterful financial engineering, and an illusion of stability so convincing it has fooled the world for centuries. By the time we're done, you will never look at your bank account, your mortgage, or the very paper in your wallet the same way again. Our journey begins not in a modern skyscraper, but in the muddy, chaotic world of 1694. The English crown was flat broke, drowning in debt from yet another costly spat with France. The royal coffers were empty. Seeing an opportunity, a cabal of wealthy merchants approached the desperate government with a proposition that would change the world forever. They said, "We'll grant you a loan of $1.2 million, which was a king's ransom back then. In return," they demanded, "give us a royal charter to establish a bank with the exclusive right to issue paper money, backed not by gold, but by your new government debt." The king, with no other options, agreed. And just like that, the Bank of England, the mother of all central banks, was born. Let's be clear, this wasn't a bank for the people. It didn't offer savings accounts to chimney sweeps or loans to blacksmiths. Its primary function was to finance the state's wars and, of course, to generate handsome profits for its private shareholders. It was a fusion of state power and private interest, a model that would prove dangerously effective. This blueprint, a private entity with a government-granted monopoly on money creation, was so successful it was soon copied across Europe. By the 19th century, these institutions were quietly pulling the strings, issuing currency, bailing out their respective governments during crises, and accumulating immense influence, all while operating completely beyond the reach of democratic accountability. Across the Atlantic, however, the Americans were having none of it. Deeply suspicious of concentrated financial power, they fought tooth and nail against a central bank. The first and second banks of the United States were both dismantled after bitter political wars, with critics like Andrew Jackson decrying them as corrupt tools of a wealthy elite. For most of the 19th century, the U.S. financial system was a chaotic free-for-all, a veritable Wild West of private currencies, speculative frenzies, and devastating bank runs. Then came the panic of 1907. The system finally collapsed under its own weight, a crisis so severe that the entire U.S. economy was saved only when one man, the Gilded Age titan J.P. Morgan, personally intervened. He famously locked the nation's top bankers in his private library and refused to let them leave until they coughed up the funds to stabilize the markets. This spectacle of one private citizen holding the nation's fate in his hands created the perfect pretext. The public was told a central authority was needed to prevent such chaos. In 1913, Congress passed the Federal Reserve Act, and the creature they'd fought for so long was finally unleashed. It was sold to the public as a decentralized, impartial referee. In reality, it would become the most powerful central player the world had ever seen. And this is where the plot thickens into a murky, convoluted stew. The Federal Reserve is a true Frankenstein's monster. It's not quite a government agency, but not quite a private corporation either. Its board members are appointed by the president. Yet the regional Federal Reserve banks that make up the system are privately owned by the very commercial banks they are supposed to regulate. Isn't that cozy? It funds itself not through taxes, but through interest earned on the government debt it buys with money it creates out of thin air. It's a perpetual motion machine of profit and power, operating in the shadows and making decisions that dictate the lives of hundreds of millions, all without a single vote being cast. So, who is this strange beast actually serving? The official story, the one they repeat in their painfully dull press conferences, is a dual mandate of promoting maximum employment and stable prices. A noble goal, to be sure, but if you look at their actions instead of their words, a very different picture emerges. When the system broke in 2008, did they bail out the homeowners with subprime mortgages? No. They unleashed a tidal wave of newly printed trillions to bail out the very investment banks whose reckless gambling caused the crisis. In 2020, when the world shut down, they did it again, on an even grander scale. They didn't just cut interest rates. They began buying corporate bonds, propping up zombie companies, and pumping so much liquidity into the markets that they inflated the greatest asset bubble in human history, making the ultra-rich astronomically richer, while small businesses were boarded up and families were told to wait for a stimulus check. But here's the billion-dollar question they pray you never ask. If they can conjure trillions of dollars out of nowhere to save Wall Street, why can't they do the same to cancel student debt, rebuild infrastructure, or fund health care? The silence in response to that question is where you'll find the uncomfortable truth. The reality is that central banks don't just manage the economy, they socially engineer it. They are the ultimate kingmakers. With a subtle shift in interest rates, they can make the stock market soar or send it crashing into the ground. When they turn on the money printer, a policy they dress up with the fancy name quantitative easing, anyone holding assets like stocks or real estate sees their net worth explode. When they raise rates to fight inflation that their money printing often caused, it's the working class that pays the price through higher mortgage payments, credit card debt, and car loans. It's a rigged game where they control the board, the pieces, and the rules. They hide behind a veneer of independence, but the revolving door between central banks and the financial behemoths of Wall Street spins so fast it could generate its own electricity. Former central bankers become millionaire consultants for investment firms, and top executives from Goldman Sachs magically reappear as key policymakers. It's not a conspiracy theory, it's just a career path. Their language is a weapon of mass confusion, deliberately academic and impenetrable, designed to make your eyes glaze over before you can figure out what's actually happening to your money. Today, we are living in the endgame of their grand experiment. Institutions like the Federal Reserve, the European Central Bank, and the Bank of Japan are more powerful and less accountable than ever before. Since 2008, they have warped the very fabric of our economic reality. Near-zero interest rates became permanent. Printing trillions of dollars to buy government and corporate debt became a routine Tuesday. The result was a funhouse mirror economy. Asset prices decoupled from reality and blasted into the stratosphere. For the 10% of the population that owns the vast majority of these assets, it was a decade-long party. For everyone else, it was a quiet catastrophe. Your savings account earned you nothing, actively losing value to inflation. The dream of homeownership drifted out of reach for an entire generation. The stock market became a casino completely detached from the health of the real economy. You felt it every day. The squeeze, the sense that you're running faster and faster just to stay in the same place. You were told to blame politicians, or globalization, or bad luck. Anyone but the invisible architects meticulously designing the treadmill you were stuck on. So, you are left with a choice. You can remain a pawn in their game, perpetually confused by the jargon and at the mercy of their next market-moving announcement, or you can learn the rules and start playing a different game entirely. True financial education isn't about learning to budget better or picking the hot new stock. It's about understanding power. It's the revelation that money is not a neutral tool, that inflation is not a natural weather phenomenon, and that interest rates are a political lever used to shift wealth. Real freedom begins when you understand the mechanics of the system designed to entrap you. It means recognizing that the system's core function is to encourage debt and consumption, punishing savers and rewarding speculators. Growth, fueled by an endless cycle of borrowing, is the treadmill. And The central bank's job is to make sure it never, ever stops spinning. What can you do? You start by seeing the world with clear eyes. Central bankers are not infallible economic deities. They are fallible human beings with biases and agendas. Their tools are not surgical instruments for creating prosperity. They are sledgehammers used to protect the system at all costs. You cannot overthrow the system, but you can build your own lifeboat. You can position yourself outside of its immediate blast radius. This means diversifying your wealth, leveraging from debt, and owning real, tangible things that can't be summoned by a keyboard shortcut.
It means simplifying your life, building skills, and creating income streams that aren't solely dependent on the health of a fragile, debt-addicted economy.
It means simplifying your life, building skills, and creating income streams that aren't solely dependent on the health of a fragile, debt-addicted economy. Most importantly, it means learning how money actually works and then teaching your friends, your family, and your children. Question the official narratives, because when the next crisis inevitably arrives, and it will, the central banks will do what they have always done. They will rush to save the system. They will protect the banks, the asset holders, and the machine itself. It will be up to you to protect yourself. History doesn't repeat itself, but it certainly rhymes. And if you are not paying attention to the melody, you are going to get crushed by the rhythm. If this gave you a new lens through which to see the world, hit that subscribe button. The answers are all hidden in history. I will show you where to look.